Hi everyone, my name is Marian and I'm with Premium Q Moving and Storage. Thanks a lot for watching today. You're watching Relocation Simplified. Today is episode 2, that we have Anthony as a guest. First of all, thanks a lot for taking the time to be with us today. If you don't mind to introduce yourself and say which company you're working with, and I'm sorry for my voice, and what do you guys do exactly?
Yeah, so my name's Anthony DeCero. I'm a loan officer with New Fed Mortgage, and we do residential home loans, investment properties as well, but primary residence, single family condo, multi-family homes. If you want to purchase or refinance, we help you get the mortgage and the financing set up for that.
Again, thanks a lot for taking the time to be here today. All right, so we'll just jump right into the questions. If you can help with a few tips, say, what do you think, from your opinion, from your experience, how hard is it to borrow down payment from a bank if you just go fresh out of college?
Well, millennial or not, down payment seems to end up being one of the more difficult things to come across. So you can't really necessarily borrow a down payment, but there are a lot of grant programs for first-time home buyers. They're state-by-state, city-by-city grants. So you have to do a little bit of research, but there are a lot of them out there. So that's also, a good option. The big one coming out of college, as we know, student debt is quite a burden, and it's hard to save, especially if you're paying rent, student debt, credit cards that come up from just living on campus and not probably being able to work very, very much. But if you're relocating and you have a good job offer, a lot of the times you get a sign-on bonus, which is a good option. We can use a contract, even if you haven't started, we can use a contract or a proposal for income. If you come with a bonus, it's like a built-in down payment. The other option is too, if you're lucky enough to have some family that's willing to give you a gift. Again, nothing can really be borrowed for a down payment, but you can get a gift from a family member, whether it be a father, uncle, grandparents. Just a quick transfer of some funds and a letter saying that it's a gift can help with the down payment process. So it's a straightforward thing. You typically need 3% as a down payment would be the minimum. There are some good programs if you're a veteran with 0% down, and there's certain areas within Massachusetts and New Hampshire that they do also offer 0% down programs, but usually the minimum is going to be 3%. Yeah, 3%.
All right, so keep in mind, like he said, of course, you're going fresh out of college, you probably have a few credit cards, and not to mention the student debt that you probably went into. But if you have a good job, or like he said, you can just have a good job offer, contract from your new employer. Let's say you just get a contract. But does that apply if it's just within the state, within Massachusetts? Or let's say if the student is going out of college, or he's just finished it up, for example, let's say it's at Harvard or any of the colleges here in Boston, and then he gets that job offer in New York, for example. Would that still apply? But
well, I can't really speak to individual states. We're licensed in New Hampshire, Maine, Massachusetts, Connecticut, Rhode Island, and Florida.
Okay, so then let's focus on those. Let's say if he gets if the student he went to school in Mass, but then he goes he gets a job offer in Maine.
Okay, so it doesn't necessarily have anything to do with the location of the job. It's just a typical underwriting guideline or program that's available. So it's a way to determine future income. Everything when buying a home is about kind of security and your ability to repay that loan. So it's not that everybody's trying to go over the top to dig into your life and everything that's happened, but we need to know where the money's coming from, that your job is going to be secure, how much you're going to make, and as if there's a potential for a foreclosure in the future. So it's really more about preventing anybody from defaulting than it is from trying to deny somebody from getting a home.
Yeah.
So if you have an offer, a written contract from a new employer, you can take a job anywhere. You would just have to find a lender that is in that state that could give you the loan. So let's say you're transferring from New York out to Massachusetts. I would take a written and accepted job offer, and that would be your salary. So if you've been in college for 4 years, you come out, 2 months later you have this job offer, there's real no work history, so we can't really tell how long you've been working, obviously, and then how well you do at paying your bills, but we can figure it out by this new contract, and we can use that as long as it's a base salary.
So just make sure you have your employer maybe sign for a potential, full-time job instead of just, writing in there that it's a part-time.
Correct. Or, temp agencies are going to be difficult, but it needs to be a full contracted offer. If you're fresh out of college and you've been working for 2 years, typically that's all you need is a 2-year history to purchase a home. We average out their income. Unless it's a salary, we would just use your base salary. So there are two different options, whether you've already established a work history or if you're just coming out into the workforce. There are some different options available for you as far as obtaining a home loan.
Got it. So I think this is super valuable information that you can get out of here. For example, let's summarize everything that we talked in this question. So if you are just coming out of college, just make sure if you have work experience, it helps a lot, of course. But if you don't have any work experience, just make sure you get that contract signed, that job offer signed by your new employer, saying that this is the potential salary the student is going to get for the next year or something.
Exactly.
Similar. So just make sure you get that in writing, and you should be all set. And that should be helpful too.
Yeah, and it goes the same for anybody doing a relocation. If you have an offer and you work for an insurance company and you have a new contract moving to Massachusetts with a new insurance company, there's a couple month gap where you're probably not working. Typically, you wouldn't be able to get a home with not having steady employment, but if you have a written offer and it all makes sense, it works the same whether out of college or just transferring job to job from state to state.
From state to state. Got it. So this actually brings us to the question number 2. A lot of times we see us as a moving company, we see a lot of people, we move a lot of people from out of state. Doesn't matter now if they're coming from New York or Maine. Mm-hmm. Let's talk now about states that you guys cover. So let's say we move somebody here, or we get a question for quote moving somebody from Maine to Massachusetts, and they say, hey, I'm not sure yet if I'm going to be able to close on time. What is the process different when they come in out of state versus if they move within Mass? Of course, keeping in mind that you might come from different banks, so right, that would matter too?
Well, no, not necessarily. It's the same process. It's just a matter of you having the ability to move it from one place to the other. So more often than not, a lot of the clients, if you're local, we do, offer, in-office and home appointments and things like that to do the pre-approval and the mortgage process. But if you're out of state, a simple fax machine or a scanner can get me the documentation that we would need. The process is the same whether you're in state or out of state. It's just a matter of the application process, getting that paperwork and obtaining any documentation we need for the underwriter to approve the loan.
Okay, got it. So it's not as complicated as
No, you would think it. The only thing is if you don't have access to the electronic documents and things like that, it can be complicated. There's also out-of-state closings as well. If you can't make it to the closing, you need a few extra days to do a mail away, or most of the time attorneys cover more states than lenders do, so they can have one of their contract attorneys go out and do the closing, even if you're not able to do it. And that goes the same with the power of attorney. If you're moving you went away to college, you're coming back and you just can't make it to the closing, give a power of attorney to your parents to sign for you and things like that.
They do that on your behalf?
They can do that on your behalf.
Super.
Easier for the seller side than the buyer side, but there's ways to make it happen. Yeah.
Got it. All right, and question number 3. We've seen in the past, I would say in the past 10 months to a year, a lot of closings that didn't go as well as they thought, meaning even last week we had someone moving from Mass to Maine, and we ended up bringing the stuff to storage because they for some reason they couldn't close on the specific date. Same story 2 weeks ago, especially over the summertime, like you probably imagine. Have any laws have changed in the past year or so regarding the closing, regarding any bank documentation or something like that causes this kind of problems to buyers or sellers? Or
yeah, well, it really starts with choosing a good lender first and foremost, getting a good solid pre-approval with the credit check and the documentation being looked at by a loan officer. A lot of the issues that come up can be prevented prior to finding a home. So a lot of things to keep in mind is paying your credit cards on time, not opening any new credit lines. Obviously, a loss of job would be kind of devastating anyways, but that would put a halt to the process because there are checks at the beginning, and there's checks and balances again at the end, just to make sure that everything flows for where we are. A couple of rules and regulations that have changed, not over the last year, but within a relatively short period of time, would be TRID, where there's documentation called a closing disclosure that has to go out 3 days prior. So if everything's not in line 3 days prior to closing, and that document's not signed or received by the buyer or the person taking the mortgage, then they would hold up the closing, because there's big fines involved. It has to be 72 hours before closing, before that we need documented and signed that you have received that in order to go to closing. Things that do pop up tend to be preventable. Making the payments on time, not opening up any credit cards. Don't change jobs during the process. Hopefully you don't lose hours and things like that.
Yeah.
Being upfront with the loan officer. I mean, a lot of people feel that we're here to kind of deny a loan when we're actually here to help you get approved for a loan. So the more honest and upfront and the more documentation that we have, we can help point you in the right direction for the loan to avoid any issues. So things do come up. It's unfortunate, whether it be on the seller side or the buyer side, but most of the things can be avoidable. The only thing that I have seen come up that is outside of what anybody's control is like title issues. If there's a random lien that the attorney finds close to closing, or there's a family member who feels like they have entitlement to the house that you're buying, it can pose a little bit of an issue to go through litigation and things like that. But most of the time, when problems happen, it's one or two things. It's either a seller didn't disclose proper information on the property itself, the lender didn't do their job in fully vetting the pre-approval, or the buyer or the person obtaining the mortgage makes a mistake with some of the things that we've already talked about.
Right. What would be your main tips regarding the TRID program for the seller versus the buyer?
Well, for the seller side, it's more important for the agents to get the information to us soon enough so that our closing department has enough time to work with the attorneys and draft the final paperwork. For the buyer side, obtaining insurance earlier in the process and not waiting till the last minute. Homeowners insurance is a big thing. All the final numbers need to be within certain tolerances, otherwise we can't send that disclosure out to have it re-signed, and it's mandatory 3 days prior to closing. So that's more of like a regulation that we as the banks need to make sure that we follow.
Yeah.
So as far as tips outside of like the TRID that would hold up a closing, and there's built-in stop gaps and things like that for an issue where you can't obtain the closing disclosure in time, where they build in an extra 7 days for closing and things like that. But moving's a big deal, and people get stressed out. They get
so many things
going on from the buyer and the seller side that there's a lot of emotions involved, and the biggest thing is just give yourself enough time. Make sure you've prepared. I mean, saving for a down payment is a must. You don't want to be scrambling around with your final paycheck just to have enough money to close it. If you're doing that, you're really not ready. Although you probably can get a loan, you're really not ready for that, because then you have to think about if, God forbid, you need to do any renovations or things like that. Another big issue is, especially with first-time home buyers, going out and purchasing furniture. If they're coming from college, they may not have too much for you to move, but they're going to want to invest into some more.
If it's a larger home,
or something like that, don't put it on a credit card. You want to make sure that you already have that pre-planned and pre-budgeted, because if you put it on a credit card, and it will affect the closing, absolutely, because you have a ratio of how much of your income you can use to afford things in the home, and then also for student loans, car payments, and things like that, that if you go ahead and rack up a credit card debt and you're close to qualifying, it can get you denied right at the last.
Just because of that last decision they make for maybe a few $1,000s that you trying to
Let's say you go to one of the big furniture stores and you take out a credit card for 10 months and it's a $300 payment. That could make or break you qualifying. And then people don't
realize that until
the last second. So it's really important to stay on top of things like that to avoid any issues coming to closing.
Super, got it. No, this is super information. Thanks a lot for watching, guys. Don't forget to leave your comments below. If you have any questions at any time, feel free to comment down below. We'll address it to Anthony, and we'll answer in the comments. Or most likely in the next few episodes we'll have him back, because I'm pretty sure you guys will have a lot of questions for this. Again, thanks a lot for watching. Again, my name is Marian. We had Anthony here today helping with these questions, and again, really appreciate the time. Thanks a lot, guys.
Thank you.